to the SoFlo Real Estate Show. And today's podcast, Ask Athena and Julie Anything. We're focusing on the National Association of Realtors and the impact on the residential lending. So this will be really interesting for all of you out there who are thinking of buying a home and wondering how in the world is this going to impact you. So if you're wondering about buying a home and you're wondering how you're going to get finance in order to purchase that dream home, this is a podcast you are going to want to listen to. To be honest, you're not alone. Everybody has the same wonderment. How are you going to buy a home once the ruling takes effect and all the changes come into the market? My name is Athena Chilikas Barocas. I'm a top producer and award-winning realtor with Coldwell Banker here in sunny South Florida. I have Julie Dindo with Radius Financial Group, and she will be joining us as our co-host. Hi, Julie. How are you today?
Hi. Hope everyone had a great weekend. Nice to be here.
It's nice to have you here. And I hope you're ready to cut through some of this media hype on how the NAR settlement may impact financing. So I'm glad you're here with us, Julie.
No problem.
So today we're going to talk about a very important topic, and I'm going to put together a channel strictly on cutting through the media noise as we go through the NAR settlement, the DOJ, and the changes that are going to be implemented or be required to be implemented in our new world. But before we get there, what I wanted to do is ask Julie to join me on a conversation and talk about, historically, what have we seen in the industry and how the real estate industry, both on the real estate side and the lending side, because they do work together in order to help buyers and sellers transact in a changing environment. So Julie, let's step back into the world we know. You bring in 30 years of Radius Financial Group lending. You have about 15 years of real estate experience, correct?
Correct.
I have 21 years of real estate experience, and Coldwell Banker has 117 years of real estate experience. So between our two companies, between the experience that you and I both bring, we have seen a lot of changes in the marketplace when it comes to real estate over our tenure. And, I think I'd like to go back to actually the housing bubble, because that's something I think everybody in our audience either has felt or knows of. What do you think? Can we explore that a little bit?
I think we should. Yeah, absolutely. Let's do it.
Okay, let's do it. So the housing market is somewhat like today with the NAR settlement. We wake up one morning and boom, everything is going to be an influx, right? We both know how that felt. Lehman Brothers, out of business, housing market crashing. But in that time, it was very, very scary. Buyers are thinking, how am I going to buy a home? Sellers are going, how do I sell in this home? Julie, the lender, you're thinking, how do I lend in this market? Realtors are, how do I operate in this market? And we're all doing one thing, and that is to protect the consumer throughout this process and to advocate for them. Julie, why don't you tell us a little bit from the lending perspective, what that felt like, and what were some of the challenges that you had to overcome as a lender?
Yeah, I mean, I think a perfect case in point would be TRID. That was a rule that was such a large piece of regulatory change. So there was years of discussion prior to the rollout, and anyone who's not new to the housing industry, it has already had a general understanding of the rule itself. Essentially, the rule was like a 2,000-page beast. It was so complicated. The bottom line is that TRID, it essentially has to do with your disclosures on your loan estimate and your closing disclosures. So a CD must be received by the borrower no less than 3 days prior to the loan. So what ended up happening is that implementation of that rule was such an expensive endeavor for the housing industry. The systems had to be up there. The software had to be updated. Everyone had to be able to accept and also create new ways to work around this system. We had to train people. There had to be people that were hired to make sure that they monitored stuff like that. But because of everything that was involved with it, and nobody thought that we would get through it. And now it's like secondhand. Nobody sees anything different. It's obviously better for the consumer. So everything's going to always sound challenging, and it's going to seem like it's this huge crazy thing that nobody knows what it's about. But usually what happens is once everybody puts their minds together, we come up with a better system that's better for the consumer ultimately.
That's true. And it ended up being better for the consumer. There was just a lot of noise we had to get through, a lot of media hype that really was filled with misinformation. And there was a lot of paranoia out there in the market. I know on the real estate side, we went through extensive training on what the new rulings were going to require, how TRID was going to work, how we can help explain this to our customer to help the lending industry be able to move forward. So it's always been a very collaborative endeavor whenever there's new rules in the real estate industry. And I remember that very, very well. One of the things that happened was the short sales, the REO or bank owned sales, and that had a whole different feel to it as well, something we never encountered ever as far as
No.
the impact on the market. But again, the lender came up with ways of managing through these new regulations. The real estate side came up with ways to manage through the regulations. And at the end of the day, the consumer did prosper. And I feel that's a lot of what's happening today, Jolie, is we have to cut through some of the noise.
Yes, I agree, but that's how you get the viewers, right? Is to create panic.
That's true. Push the fear. But, there
Yes.
is a lot of fear. And, I was just out to dinner the other night, and one of my, guests at the dinner table brought something up that was it was so far out there. And I just thought, wow, we really do need to continue to cut through the noise so that way we can give the best information to our clients so they can continue to make the best decisions for themselves and their families. So,
Correct.
let's go back to March 15th. That was a big day. That's going to be as big as the short sales coming onto the market or the housing bubble crash. March 15th, NAR agreed to a settlement of an incredible number of $418 million. And those changes from the settlement will go into effect, I believe it's July this year, Julie. Is that correct?
Yes, correct. Once it's approved, it would be July.
Yeah. And so as of today, nobody knows what those changes are going to be or how they're going to impact the market. And so Julie and I were just talking, right, Julie? We were just talking about, all of the hysteria out there. So we wanted to give you today really what the 5 possible impacts on financing or the lending industry may look like that is more high level, but I think we need to start somewhere. So Julie, I really appreciate the fact that you came on and you're willing to talk about the 5 potential maybe impacts to the lending industry. So let's start with the first one, closer collaboration. Tell us a little bit about what you're thinking in that.
I think when we say closer collaboration, it just helps us understand the importance of that lender and realtor relationship. So as the changes are going to be made in the industry, it's important to ensure that the lender and the realtor that you hire have the expertise, the experience, the know-how to understand and execute the new process and protect the consumer. Lenders and realtors will need to work together as a team with the consumer to ensure that compliance and success.
I agree with you. I go back to the housing bubble, and the only way we got out of that really was working, side by side with the lender, an experienced lender and an experienced realtor who really understands on how to navigate change in the marketplace. And these changes could be quite large, and it could change the way that realtors have a relationship with their client and the way that a lender may have a relationship with their client. So
And
having
I'll
a
say
lender and
too,
a real yeah.
and I'll say too, with that closer collaboration, it kind of brought us back to what was happening in 2020, where a lot of people wanted to refinance, a lot of people needed money quick, and so our real estate agents would reach out to us and say, how do we, get past this 90-day closing on these crazy, crazy things? Like, how do we do it? And we were able to maneuver something in-house that we were able to do, where we were able to close a lot faster than the big banks were. So, and the only way that we were able to do that is because we were working with the realtors, and they were telling us what they needed, like, right now. And so you have to be able to collaborate, and we have to be able to trust each other and know that each other has essentially the best interest of the consumer at mind.
Yeah, absolutely. So let's talk about the streamline process. This is interesting because we really need to understand what that new process is going to look like. But how important it is to streamline the process?
I think that this ruling, it could lead to a more streamlined process for pre-approvals, and perhaps making
Hmm.
that pre-approval a standard, like a standardized step in the home buying process. Buyer broker agreements as well.
Yeah, I like both of those, to be perfectly honest. My 21 years as a realtor, the first step after the initial conversation is let's go get your pre-approval. And there's very good reasons for it, which we're not going to go into today's podcast. However, the pre-approval process is so important because the lender really is the one who's able to determine from that process how qualified you are, what your budget could be, what the rate is, and on and on and on. And then when we get to buyer broker agreements, I love buyer broker agreements. They're new to a lot of markets, and they've been standardized in a lot of markets as well. So we'll talk more about those two items in another podcast. Compliance checks, Julie. Talk to us about compliance checks.
So compliance checks, I think, is going to be the new standards for realtors and for lenders. So this can include additional documentation. On the real estate side, an example could be a buyer broker agreement. Just a lot of checks and balances.
I see that, and I go back to in our history. We had COVID, we had the housing bubble. We have a lot of real estate documentation, not unlike the lender, very much like the lender, that new forms, new disclosures come out in the market to protect the consumer. And we all have to become educated around what those forms are, what do they mean, and how to implement them in the marketplace. So again, working with an experienced lender and a realtor will help you be able to navigate those changes as they become available or become mandated
Mm-hmm.
in our
Mm-hmm.
industry. Educational opportunities, Julie. Let's talk about that.
So I think this is going to help educate buyers more effectively on both the home buying process itself as well as the lending process. So I think the goal is to enhance that buyer readiness and satisfaction throughout the whole process.
I agree with you. As a realtor, we take continuing education, we classes and courses, and we have to be certified every 2 years. Um, and the educational process has always been number one on a realtor side as well as on the lender side. And I take it very seriously. I know my colleagues take it very seriously. I know the lenders I work with, such as Julie, takes it very seriously. But the only way we can move through change is really by being educated and being open and to have that understanding of what that change really entails for our
And,
clients.
and I think it also, the fact that the buyers just need to be more educated. I think that's really what they're going to really be pushing, is that the buyers need to know the different options, the different, it's they have a lot. You have a lot to learn. I mean, even in the pre-approval process, it's a lot, but you have to know what's going on, and you have to have, those things taken care of on the professional side.
Absolutely. And it's not something that a consumer can do by watching a YouTube.
Correct.
It's a process, and there's so many touch points throughout the process that, being guided by a professional is really going to make a difference for that consumer, especially as we continue our education process as professionals.
Correct.
What the last one, and I love this one. The last is the market dynamics. This is an important piece, and I just want to spend a couple extra moments here because this is really where I think we're going to see a lot of impact, a lot of regulations coming in. This is where we're going to see some change implemented. So talk to us about the market dynamics, Julie.
Yes, I think that this ruling might influence market dynamics dramatically, possibly affecting the loan products, the services. And I guess what I really mean by that is, this may affect those buyers that are putting less than 20% down with their down payment, buyers with VA or FHA loans. So I think that the reason that they made it, so far in advance that they're going to come, up with the actual ruling on this case is there's a lot of stuff that needs to be discussed. You can't take away, a VA being able to get in a home with 0% down. You can't take away those families that have been, saving and only have that 3% down payment to put in to their home, and it's taken them 5-10 years just to save that 3% so they can finally be homeowners. And I think that would affect them greatly. And I think that they're really going to take their time on it and work on it and work with, with our mortgage, regulation as well as the realtors. And, and I hope that they come up with a great solution to that problem.
Yeah. No, I agree. We can't, the whole process is really consumer protectionism. And I understand, what has taken place over the years. But now that we're looking at, the real impact or how the impact could affect certain buyers, it's the buyers with less than 20% that you're right. I'm concerned about as well. And the regulatory, those who are in charge of the, creating the regulations and the regulatory arm are really going to have to come up with guidelines that work. So that way the vets or the VAs, loans will be approved. That way FHA loans will be approved. That way, any loan that's less than 20% will be able to be approved. And what we're really talking about is how that extra cost of perhaps commission is going to play into this. Correct, Julie?
Correct. And if you have 20% to put down, you can, only put 10% down and use the other 10% to pay for your, agency fees and, and stuff like that. So that's why we say 20% down, because then you have some flexibility. But there are consumers out there that do not have flexibility. And those are the people that I'm personally more concerned for. But, over
Right.
time, and traditionally, it is the consumer at the end of the day that we're all looking out for here. So I'm pretty sure that they're going to come up with something, to kind of help with that. But I guess we will only find out when we find out, right?
Absolutely. And I think that's going to be the focus of a lot of the
Mhm.
dialogue that's taking place at a much higher level outside of, your purview or my purview. And
Correct.
I'm not worried about it. I truly believe that between now and July, when the changes are implemented and we're all made aware of what those changes are, we're going to be able to work through and help guide our clients to the end result, which is buying their dream home. So
Correct.
I'm not worried about it. Julie, are you truly worried about it?
Not, anytime something like this happens, it usually, works in the favor of the consumer. And, and even though it might make us work a little harder or, or weed out people that maybe you're just doing it, just becoming a real estate agent because their friends are buying a house, it might weed out people like that. And, and everything happens for a reason. That's how my take on life is.
It all does work out. And I'm
Yeah,
excited. I'm excited to see some changes come into our industry, the real estate industry, which is for realtors and lenders and title and everybody else. I'm
yeah.
excited to see some changes come in if it's going to help the consumer at the end of the day. And I'm looking forward to those changes. So the takeaway is today, Julie, nobody knows what's going to happen.
Nobody knows. Don't listen. They don't know. They don't know.
They
Not
don't know.
yet.
No one knows.
No one
No
knows.
one knows. But we do know change is more than likely going to come and the industry will respond. And as a consumer, be sure to pick the right lender, the right realtor to help guide you through these changes. So focus was, oh, go ahead.
Yeah, I was going to say my takeaway, I think, is that lenders are going to could innovate with new loan options to meet those changing needs driven by that NAR settlement. We need to focus on transparency, compliance, and overall the enhanced buyer experience.
I agree with you. The enhanced buyer experience. I love it. I absolutely love it. Well, stay tuned. Next week, we're going to continue our series on cutting through the noise in the NAR settlement. In the meantime, if you have any questions at all regarding the home buying process or loans or how you could work through some of your challenges, make sure you reach out to a lender and realtor you trust. Julie and I are always here. If you have questions, go ahead and reach out to us as well. Thank you, Julie. We'll see you next week as always. Bye,
All right.
everyone.
Have a great day.